Hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Well, over the next 30 minutes, we'll be talking about the trade setup, the sectors in focus and all the stocks that will be hogging the limelight in today's trading session. And we'll also be getting your queries answered by our experts. So if you have any stock-related queries, continue to comment live on our feed and we will have them addressed by our experts. But before we do that, let's take a look at the top headlines at this hour. Asian markets begin the week on a strong footing. The SGX Nifty indicates a positive start for the Indian market. China, meanwhile, has set a modest target of around 5% for 2023. That's among the lowest in decades as its National People's Congress opens the year's session. Billionaire investor Mark Mobius says he cannot take his money out of China due to the country's capital controls. Cautions investors to be about investing in an economy under a tight government grip. He believes India is a more viable and transparent investment destination. Also on the show, will China's modest growth targets stall the metal rally? In focus today are Reliance Industries, Adani Group stocks and Power Grid. Well, we are now joined by Osho Krishan of Angel One to discuss the trade setup and all the stocks that will be hogging the limelight in today's session. Good morning, Osho. Good to have you on the show. The Nifty managed to end last week with gains thanks to Friday's 270-point rally. Do you expect the momentum to continue in this holiday-shortened week?
Well, good morning. Looking at the overall technical setup of what we have seen in Nifty in the last previous week, that is on Friday, we have seen a very strong closer. So what we have observed that finally Nifty has came from the slumber phase where it was stuck at approximately around 17,250 to 17,500 zone. So we have seen a strong traction on Friday, and from there onwards we are even witnessing some kind of a strong rally in Bank Nifty. So that is also a very positive construction because Bank Nifty being the high beta sector has provided strong support for the Nifty. So from here onwards we can expect the rally to continue, but again on the higher end we are still not completely out of the woods because 17,800 and 18,000 is the major hurdle for Nifty. So once we breach 18,000 on the higher end, then only we can see the bullish trend to continue from there onwards. Till 18,000 is not surpassed, we can witness some kind of consolidation in between, and even there can be some kind of lackluster or sideways movement in the overall benchmark index. But looking at the broader space is looking very attractive. The Nifty mid-cap index is looking very attractive as of now. So we can see immense opportunity for trading purpose. And from here onwards, we can expect sector churning or sector rotation on a very day-to-day basis. So yes, being a truncated week, we can still figure out many sectors, many counters, which can give a very good opportunity for the traders in the stock market.
Right, hold that thought. Osho, will come back to you. But let me also get on board Gaurang Shah of Geojit Financial Services, who joins us this morning. We'll be talking about the metal rally that we saw last week. Good morning, Gaurang. Good to have you on the show. You know, we saw a smart surge in the metal index last week, thanks to strong Chinese data. But given the fact that the GDP target for 2023 has been set at a modest 5% by China, which is the lowest in decades, do you think that puts this metal rally at risk?
Well, thank you, Nandita. And first of all, let me wish you, your entire team, all the viewers of Moneycontrol.com a very happy Holi, and wishing all of you all the vibrant and brightest of colors in all your life.
Thank you.
So,
thank you,
yes, I definitely agree with you that China news has an overhang on the entire metal sector. And it has been the story not only now, but since the time the pandemic started. So, yes, this news can be a deterrent on the rally that we've seen on the metal sector. But my sense is that it is going to be a short to medium term, given the fact that we have, unlocking happening in China. And not to forget, China, if I'm not mistaken, one of the last countries that were moving into from lockdown to unlock situation. So to scaling down of the estimates is absolutely the need of the hour, given the fact the backdrop of events that we are coming out from. But our sense at Geojit, Nandita, is that, domestically, there has been great demand for flat and long products. We've also heard the verbatim from some of the managements that they are in a position wherein the prices of flat and long products are going to be revised upwards. Along with that, Nandita, the input cost, which was a deterrent on the EBITDA margins and net profit, has kind of scaled down a little bit in the sense that input cost has come down, wherein we can expect better profit margins for some of the companies. So if you're not looking at short to medium term, but if you're looking at long term, then my sense is that Tata Steel below 100 could be a good investment opportunity. JSW Steel, Hindalco, Vedanta, and Jindal Steel and Power. These are some of the 5 investment ideas on the fundamental side from Geojit Financial Services.
Right, so those are the stocks looking attractive from a long-term perspective. Let's also talk about the dollar that has eased from a 7-week high. But given the fact that there are hawkish comments coming out of the Fed members, and later this month we have the Fed meeting as well, right? So if the Fed goes in for a 50 basis point hike, that of course would mean that the dollar would strengthen further, right? So would that be another risk to this metal rally now going forward?
Marginally, yes, because currency fluctuation always has an overhang, not only for this particular sector, Nandita, but all those sectors which are, export oriented and dollar dependent. But the fact of the matter is also that some of the countries have now started to move from dollar dominated trade to, a domestic dominated trade. So this could be one particular aspect of it. US Fed raised rates beginning this year and early last year. We all are aware that situation in US is going to change. Fed is going to take aggressive steps to bring down the inflation, boost economy. So 25 to 50 basis point is definitely accepted by the market and possibly digested and discounted also. Anything more than that, or more of an hawkish commentary from US Fed could play a little bit of spoil sport. But this particular news flow of US Fed increasing by 25 or 50 bips in the next couple of months is definitely on the cards, and maybe to a certain extent it has been discounted and digested by the market.
Right, you had mentioned Vedanta. Let's talk about it in details. The stake sale to Hindustan Zinc has run into a hurdle, and there are debt worries even when it comes to this company, but the management has allayed such fears. What are your thoughts about this whole issue when it comes to Vedanta?
Well, so we see Vedanta as a diversified natural resource company now. And of course, since the time they had merged in India in Vedanta, now it has become a crude oil play as well. I was listening into Mr. Agrawal's comments on our channel, CNBC TV 18. And he's absolutely clear about how he wants to take it forward. So this could be a short to medium term kind of an overhang, depending upon the news flow. But like I mentioned, on the fundamentals, we do have a positive coverage on Vedanta.
Right, positive coverage on Vedanta. There are reports that leading steel producers are looking at another price hike in the month of March. Have you picked up anything on that front?
So steel prices, like I mentioned, post the third quarter earnings and the verbatim given by most of the steel manufacturing companies, government. Let's face it, Nandita, we have 3 state elections are done and dusted. We have maybe 6 or 7 state elections along with Union Territory. Next year, we have a general election. So our sense is that the central government and the state governments would want to expedite the ongoing infrastructure projects and maybe start a couple of new ones, wherein you are going to see robust domestic demand with respect to government spending, state spending on infrastructure. Along with that, you have real estate sector improving a little bit. You have private capex also started to trickling in. So if I have to put all this thing into perspective, I don't think you can construct a durable infrastructure without metals and cement. So domestically, demand is going to go up. And if the companies are in the position to hike the prices of some of their products, be it flat or long, then I think it could only help the EBITDA margins and profit margins. Remains to be seen what is the quantum of price hike.
Right. With that, Gaurang, thanks a lot for taking out time and joining us this morning. Wish you and your entire team a very happy Holi.
Thank you so much. Thank you so much. Take care.
Thank you. With that, let's go back to Osho and talk about specific stocks. There has been a revision in windfall tax by the government. Tax on crude has been hiked, whereas on jet fuel, it has been scrapped. Given the fact that Reliance Industries has emerged as one of the top contributors when it comes to Sensex and Nifty gains, would you expect more upside on this counter? And what about ONGC? How are you reading the charts on ONGC going forward?
See, overall, looking at the technical chart of Reliance, so Reliance is near to very strong support of 2300. So historically, 2300 levels has proved to be a very strong support for Reliance. And from here onwards, we can expect a strong rally or a modest recovery initially towards the 2450 levels. And once we surpass 2450, then from there onwards, we can witness a strong momentum in this counter. So overall, the downside is very limited in Reliance. And from here onwards, one can accumulate this counter from short to medium term perspective for a very good return. Now coming to ONGC, ONGC has been an outperformer in the recent period. It has surged from the levels of 139 and is hovering approximately around 155. So this is also a very attractive counter. From here onwards, we can expect the rally to continue. In the short term, we are expecting 162 to 168 as a near-term to medium-term target. From on the downside is again limited towards 148 to 150 is a very strong support. So from here onwards, we are even very much aggressive or very much bullish on ONGC, and it can outperform the market from here onwards. So both the counter is looking very attractive, and one can accumulate at current levels from short to medium-term perspective.
So both Reliance and ONGC looking attractive. In fact, we had a query from MK on Reliance. Hope that answers your query. Moving on to the Adani Group of stocks, we've seen the stocks stage a remarkable comeback after weeks of sell-off. In fact, Adani Enterprises alone has recouped somewhere around 47% of the losses it incurred. And, over the last 5 days, there has been quite a bit of a run in all of these stocks. Now, there are certain reports that Moody's has revised its outlook on Adani Ports and Adani Total Gas to negative from stable. So, would you say that this bit of news would impact or would throw a spanner in the works for a rally in Adani Ports and Adani Total going forward?
Looking at the over setup for Adani Group, we have seen a massive correction from past 3 weeks. So there has been a strong correction of over 50% in most of the Adani Group companies. But what we are witnessing from past 5 to 6 trading sessions, that it has been in a very modest recovery phase. So from here onwards, we can expect the volatility to remain on the higher perspective. But no doubt what we are witnessing, that it has made a short-term bottom for itself. And from these levels, we can expect the upside rally in these counters. But technically, we cannot be very much sure about it because the volatility and the news flow will be having its impact. Till the time we are having a positive news feedback, then from there onwards, we can expect the positive momentum to continue. But again, we have to be cautious in Adani Group companies, all the companies, irrespective being in FNO or in cash counter, because once there will be any additional news feed, then from there onwards, we can see a massive correction also. So one should ride the momentum, obviously. But looking at the momentum, all the Adani groups are looking very constructive from here onwards. But one should also keep a trailing stop losses for the profit or from the initiation that the people have taken. So overall, the structure remains bullish, but cautious view should be remain in overall Adani Group.
Well, exercise caution when it comes to the Adani Group. That's the call. Let's also talk about Power Grid. Now, this company in fact, it has bagged 2 projects in Chhattisgarh, and in Friday's session, it was up somewhere around 3.5% or thereabouts. Would you advise investors to look at buying into this counter now?
See, overall, the technical structure of Power Grid is very sideways. What we have witnessed, that 210 to 215 level was something where it has been consolidating from a very long time. But in the recent period, there has a breakout above 215. But still, if we will be looking at the sloping trend line, then it is hovering just below the sloping trend line. The breakout will come above 226 levels. So once it surpasses 226, then from there onwards, we can see some strong traction in this counter towards 236 to 238 levels. But till the time it is not surpassing 226, any dip towards 214, 213 should be acting as a very strong support, and one should add positions around 214, 213 levels for the immediate upside of 226. And once it surpasses 226, then one should change their approach to be aggressive buyer in this counter, and above 226 one can expect 236 in the short term run.
All right, look to buy this counter around 213 to 14 levels. That's the call. Before I move on to more queries, let me talk about Britannia. CLSA has downgraded the company to sell with a target price of 4,060 rupees, and it has flagged off margin worries. And it has also cut its FY23 to FY25 earnings estimate by 1 to 11%. Now, over the last 1 month, this counter has lost somewhere around 5% or thereabouts. Would you expect more downside on the charts going forward now?
See, overall, FMCG companies have seen a strong retracement from the higher levels. But looking at the overall setup of Britannia, it is hovering near the support zone, which lies around 4,200 levels. So 4,200 level is a very strong support. We are not expecting that there should be any breach beyond 4,200 on the downside. But on the higher end, we can see traction only above the consolidation zone of recent period, which is 4,480. So once it surpasses above 4,480, then from there onwards, we can see some positive traction, because looking at the overall technical setup of the major of the technical setup has been narrowed down to the oversold region. So from here onwards, the downside should be very much limited, and one should be very much bullish in this counter approximately around 4,480, 4,500 levels. And again, from there onwards, we can expect the 52-week side to get retested in a very short-term time frame.
Right, so that's the call on Britannia. Let's take up a query on Laurus Labs. This is coming in from Ramu, and he wants to know the future prospects of Laurus Labs for the long term of over 5 years or so. If you look at the stock, it is very close to its 52-week lows. What would you advise investors to do now, Osho?
See, overall, this counter has been in the selling spree from almost more than 6 months. So this is a very weak counter. Technically, it is hovering below all the technical moving averages. So that's a very negative construction for this counter on the daily chart. Even if we will be looking at the technical setup, then technical setup has been hovering near the oversold region for quite some long time. So from here onwards, until we see a very decisive reversal in this counter, we stay sidelines from Laurus Lab. But again, if there will be a strong reversal, then we need to review the counter. But as of now, one should not be very much aggressive in this counter and should not look for any long-term perspective kind of a investment as of now. But once there will be any kind of reversal, then we can expect or review the counter once again. But as of now, one should exit the counter on any rise towards 335, 340 levels.
Okay, so you can look to exit the counter and in fact avoid it at the current juncture. The next query is coming in from Prabhu, and he wants to know your long-term thoughts on Manalipuram. Now, the stock was in a downtrend, but over the last 5 days, it has managed to gain somewhere around 3% or thereabouts. Would you advise investors to look at this one now?
Yes, Manalipuram has seen a strong correction from the levels of approximately 118 and has mellowed down towards 100 zone. But from here onwards, we are witnessing some kind of a strong traction. This has been a major support because it is the 200-day SMA from where it has seen a modest recovery. So from here, one can add the counter for the upside target of 116 to 118 in a very short-term perspective. And from there onwards, if it breaches 118, then we can again witness some kind of rally in this counter. But for short-term, the stop loss should be maintained around 100 and the target should be expected towards 116 to 118 for short-term traders.
Right, hope that answers your query. The next one is coming in from Akash Khanna, and he wants to know your thoughts on Hindustan Copper. Last 5 days, you've seen gains to the tune of 5% or so, but over the last 1 month, it has lost somewhere around 2.5–3%, and over the last 6 months it has lost somewhere around 12 to 12.5%. Would you advise investors to nibble into this one at this juncture?
The Hind Copper is also hovering at its support zone of 98, 100 odd levels. So from here onwards, the downside can be limited. So one can take a risk of, because of the having less risk or a very narrow down or a strict stop loss, one can maintain a strict stop loss of 96 and then can accumulate it for a short term perspective. But looking at the overall structure, we are still not very much bullish. But looking at the placement of the chart, one can have a very strong risk and reward portfolio. So from here onwards, one can add this counter to their portfolio for the immediate upside target of 112. But one should keep a strict stop loss also of 96 rupees.
Right, keep a strict stop loss of 96 rupees or so. Moving on to the next query, this one is coming in from Satya CK and he wants to know your technical view on Polyplex. This stock is also very close to its 52-week lows. In a steady downtrend over the last 6 months, it has lost somewhere around 36.5% or so. What would you advise investors to do with this one?
See, overall, this counter has been in a negative terrain. So one should not be very much aggressive because there is no sign of reversal, no sign of relief from the selling pressure. So till the time we are not expecting, or till the time we are still below the levels of 1550, then we should avoid this counter. Once it breaches 1550, 1560 odd levels on the high zone, then from there onwards, one can see to accumulate for the immediate target, which is approximately of 1740 odd levels. So 1740 should be the immediate target, only above 1550 odd levels. So till 1550 is not breached, one should stay sidelines from this counter.
Right. Let's take up the next query. This is coming in on Hindustan Aeronauticals. And Arun has written in, he wants to know your thoughts on this counter. Defense stocks had been on a tear last year. It had come off a bit around the budget time, but Hindustan Aeronauticals has given returns of 6% on a YTD basis. And it's in fact inching towards its 52-week highs as well. Would you advise investors to buy on dips, or is this the right time to nibble into this counter?
See, overall, the technical setup for HAL is very attractive and it is being one of the top pick from my side. So HAL being in a very broad range as of now, on the lower end 2350, 2370 is the support. On the higher end, the recent swing high or 52 weeks high of 2800 is the resistance. So till the time we are not expecting, or till the time we are not witnessing a breach from the 2800 levels, then one should keep adding this counter at any lows. As of now, the immediate support has been shifted upwards towards 2500 levels. So 2500 is a very strong support for this counter. On the higher end, 2800 is the immediate target or immediate resistance. So any fall or any blip towards 2500 should be used to accumulate this counter. And once we witness a breach above 2800, then from there onwards, we can see a rally of 300 points in HAL.
Right. We have a couple of queries on stocks from the IT basket. Konda Reddy has written in, he wants to know your thoughts on Infosys, and there's another query coming in from Akash, and he has a query on Wipro. How would you view this entire IT basket now? Which of these IT stocks are looking attractive from a long-term perspective? And also share your views on mid-cap IT stocks like KPIT.
Okay. So overall, if we will be talking about IT sector, yes, this is being one of the sector which has not performed in the recent period. If we will be talking about the mid-cap IT, then mid-cap IT has been one of the top performing from the IT sector. So many counters like Persistent, Coforge, KPIT is being very optimistic, and it is having a very good structure on the technical chart. But first, if we will be talking about the large cap like Infosys and Wipro, then these counter has been in their oversold territory. And from here onwards, we can expect at least a consolidation, because the downside is very much limited in both the counters. So one can accumulate, but one should also needs to be a very patient with these counters, because these will give you a positive returns after a very long duration or a medium term, after a medium term time frame. So one should keep adding these counters. Both the counters are fundamentally very strong. Infosys and Wipro are approximately trading around the 52 weeks low. So one should keep adding these counters, and in the let's say time frame of 3 to 6 months, we can see a decent return from both the IT sector. Now coming to the mid cap IT, like KPIT has been outperforming and it is still looking very positive. one should keep their investments in KPIT because mid-cap IT sector is looking very aggressive, very attractive, and these are expected to outperform in near to medium term time frame.
Right. Very quickly, I want to squeeze in one last query on SAIL. Kamal has written in. He says he has 1.4 lakh shares of SAIL at which he bought at 89 rupees. He wants to know whether he should exit, hold, or what should he do.
See, overall, SAIL is in a very positive trajectory from from the months of last June, July. So that means on technical setup, it is on the verge of higher highs, higher bottom pattern. And recently, we have seen a positive crossover also of all the major moving averages from the 200-day SMA. So that's a very positive construction on technical chart. So any breakthrough above the levels of 92, 93 levels can push this counter towards 100 odd levels. So one should keep their investment intact in this counter, and within a short to medium term perspective, let's say 3 months to 4 months perspective, this SAIL counter will be giving a very positive and good returns to their investors. So one should keep invested and stay stuck in this counter for a medium term perspective.
So stay invested from a medium-term perspective. Before I let you go, Osho, leave us with two of your stock recommendations for the day.
Yesterday we have seen a very strong breakout in Tata Chemicals. So Tata Chemical will be my first preferred pick. Tata Chemicals have seen a very magnificent breakout from the levels of 1000 level. So 1000 being the one of the most crucial levels for Tata Chemicals, because previously also 1000 was the resistance, and even in Friday's trading it has seen the resistance breakout on the back of volume increased. So that's a very positive development for Tata Chemicals. From here onwards, we can expect an upside target of 1034 to 1040, which is the recent swing high. So one can expect the target of 1040 from short-term perspective. On the downside, the risk is limited as 980 should be kept as the stop loss in Tata Chemical. The second counter is from the PSU Bank. Bank of Baroda has given a very massive returns in the last trading session. Approximately it was up by 4 or 4.5%, and with this it has given a breakout above 170 zone. So any dip towards 171, 171.50 should be used to accumulate this counter, keeping a stop loss of the bullish gap of 168, and we can expect an upside target of 175 to 176 in a very short term, let's say intraday or hardly by next trading session. So these two counters are looking very attractive, and one should keep the radar on these counter even for today and almost for tomorrow for the target that I have mentioned.
Right, Osho, thanks a lot for taking out time and joining us this morning. Before we wrap, here's what Mark Mobius has to say about India. Well, Mark Mobius, who's of Mobius Capital Partners, has warned investors against doing business with China, and he has claimed that investment outflows from his HSBC account have been restricted by the country. In fact, the market veteran has recommended India and Brazil as being more transparent for investors. Well, with that, we've come to the end of this show. So before I go, here's wishing our viewers a very happy Holi. And coming up next is opening bell, so don't go anywhere.